We begin with a late day sell-off, taking stocks down. All three major averages sliding hard into the close. The Dow down 457 points. S&P 500 down 2%. NASDAQ snapping a 7-day win streak. So what's the take on the market action? Guy Adami made it in like under the wire. Your box slid in there, appeared, bam. There you are.
Sweet. Hi, Melms.
Hi, Guy.
How are you? So we talked about books we read in college last night. This is going somewhere, by the way. And last night I mentioned 100 Years of Solitude. I had to read the Moby Dick in college as well. You might recall Herman Melville. Remember that one?
Yeah, of course.
So it's about 570 pages, and that's one of those things that somebody like me, you just sort of skim it. But every once in a while, you get to a page that seems important, so you bookmark it. You know what I'm talking about? Somebody like you has the highlighters.
No,
well,
I don't.
Today
I don't
is one of the days
books,
you want to.
Go ahead. Sorry.
Okay, well, fair enough. Well, I defiled, but today's one of the days you want to bookmark, and it's for a number of reasons. I have no idea why the market reversed today, but the market reversed today. And look at three stocks in particular. Look at the move in Apple. Look where Apple traded up to. Look at the previous high, sort of mid to late Jan, early February, and then look at the reversal. Look at Facebook, very similar, and also look at Microsoft. Look where all three traded up to today, and look at how they reversed on pretty significant volume. I mention it because, look, tomorrow they could all go ratcheting higher, and we'll take that book that that page that we bookmarked, and we'll flip it back over. But they could also keep going the way they're going, and then we'll say, you know what, today was a meaningful day. I happen to think, for a number of reasons, today was a meaningful day, and I think it's one we're going to be talking about in the weeks to come. So I don't know why we reversed, but we reversed, and here we are with the market. The number of stocks, a handful of stocks took us higher. Well, those stocks all reversed today in a meaningful way.
Steve Grasso, what's your take?
So I think Moby Dick is a lot longer than 570 pages. I think it's over 1,000 pages, but neither here nor there. I do think the headline, if you look at when the market turned lower, it was around 310 or so when it really fell precipitously. That headline was LA County stay at home looks to be extended through July. So to me, you had Fauci today talking about the risks of reopening too early. Then you have LA saying, hey, it's not going to be as easy as we thought. And a bunch of other states, I think, could detour whatever comeback there is or reopening there is. I don't think it's going to be as easy as everyone thinks. And the market is starting to price in maybe getting into the thick of the summer before we actually reopen the economy, and that's what sold the market off today, in my opinion.
I think the Moby Dick is probably more than 500 pages, but Guy probably read only 500 pages of it. But Tim, that seems like a smokescreen, though, to say, when the markets are up on optimism about reopenings, and then when the markets are down, markets are selling off on skepticism about reopenings. I mean, you can't have it both ways, and I guess, people are human, and they think about things in different ways on different days. But at the same time, I mean, this was a technology-driven sell-off here.
Yeah, well, people think about different things when different topics are brought up. You say Moby Dick, I say great Led Zeppelin song. And ultimately, when I look at the market today, yes, I agree. LA County was sobering. Fauci talking about college kids really shouldn't be going back to school. The Fed said they've done a lot and that the economy may have bottomed, but that we need more fiscal. So I think the Fed was actually part of the ingredients today, too. But how about just, the NASDAQ? If you look at the ETF, that's the NASDAQ 100, the triple Q. We talk about it all the time. That this morning, if you look at momentum indicators, it had a 72 9-day RSI, which means it's in overbought territory if you don't know what that means. If you look at the VIX had fallen. Volatility had fallen 40% in the previous 5 days to a place where, again, volatility was oversold. And say what you want about the Fed putting basically a boot on the throat of volatility by buying ETFs, which we'll talk about later in the show. I think you get to a place where some of these moves are overdone, even in the big picture of a market that's trying to find a base and an economy that's trying to figure out what the pace of reopening is. So I'll just take today and say it's not a 500-page novel. It's a case where we really had gotten a little bit too far too fast, and that the market doesn't really have big earnings to digest, and here we are.
I feel like a buzzer should go off or a bell should ring because Karen Finerman has now joined the conversation. Bing, there she is, like magic, thanks to technology.
There I am.
Karen, what'd you make of today's sell-off?
Well, I didn't hear fully what the other guy said. I do think we were sort of overdue, right? Obviously, we've had quite a run, but there were a couple things to point to. And one is the big Treasury auction today. So right as that happened, and it was very well received, right at 1 o'clock, we started to see a sell-off. So I don't know if that was people getting out of other things to get into the Treasury auction. And then I think at about the same time, there was some noise about China's sanctions from our side, which didn't help. I know guys pointed to that a lot as a potential risk to the market. So I think those two things certainly didn't help. This talk of negative rates doesn't help either. And so those kind of things, you mix them all together, you throw in a giant run, and it's not surprising that stocks would sell off. I think that it wouldn't surprise me to see the sell-off continue more, and still that would be okay. It's really been quite a run.
A smorgasbord of issues, Guy Adami, is the word that comes up to me. That there wasn't any one particular reason,
Sure.
but given the run, particularly in the NASDAQ that we've had, that it was just due.
Yeah, my point about the book, pages notwithstanding, is, most days are days you just sort of, leaf through, not a big deal. And then certain days are important days. And again, there are a number of reasons why we reversed. I don't know. All the reasons that Steve, Karen, and Tim mentioned are absolutely valid. The fact is we did, and we did it at levels that are really important, especially for those three stocks. You mentioned the word smorgasbord, by the way. The first thing I think of course, is a great Paul Lind in Charlotte's Web. I encourage you to Google it. And, Tim mentioned Moby Dick. And, I just want you to know that our crack staff, Mel, because I know you don't know this, listen,